Hey guys, hopefully everyone is doing well. Today's target is to solve question number 2. The chapter which we are related with is accounting ratios. As usual, we have two parallel years. Year first having its own information and then second year. The important thing is these double lines are dividing this question into two parts. The first part of the question is for profit loss statement and second part is for balance sheet. And here you can see all assets including current and fixed, all liabilities including current and fixed are mentioned over here. You can see that. So we are required to calculate five ratios. It's the routine work under accounting ratios. So let's start our question. First requirement given over here is current ratio. We are going to find out it, and as usual current ratio would be calculated by dividing current assets over current liabilities, and here we will put a bottom line, a divisor between current assets and current liabilities. Next is to see how many current assets are present in our question. Look at here. We have cash in hand. Yes, it's a current asset, 5,000. Then we have cash at bank, 4,000. Yes, it is current asset. Then we have debtors. Yes, it's also a current asset. Then finally we have stock of 15,000. It is also current asset. And next is fixed asset. So it is clearly mentioned that fixed assets are being separated from current assets. There were four current assets: 5, 4, 40, 15, 5, 4, 40, 15. We have completed. Now it's time to see current liabilities. Lower portion of this question includes liabilities. Creditors, yes, it's current liability. Then we have bill payable, 2,000. Yes, it is also current liabilities. Then we have mortgage loan, loan which has been taken for after mortgaging property. Normally these loans are for longer period of time. So this is not a current liability. Capital, we already understood, is fixed liability. Reserves and surpluses are often made with the combination of profit of several years. So it's not a current liability. So loan, capital, reserve, surplus, all three are fixed liabilities. It means our current liability section is also completed. It's now time to sum up all current assets and current liabilities. Here we will take the sum of current asset and we have got. And next we will see the sum of current liabilities and we have got. Now finally we will calculate the answer by dividing current assets to current liabilities. So we have got our answer 1.68 is current ratio. And as you can see in our answer it is 1.68. So we have completed current ratio. Now it's time to calculate second ratio, which is given over here, acid test ratio. So let's calculate. As you know that acid test ratio, liquid ratio or quick ratio, these are one of the same thing. Next is to put your liquid assets and you will be dividing it with current liabilities. Liquid assets formula is very clear. There are two ways to make liquid asset. First is to see liquid assets by subtracting stock and prepaid from current assets. So we can take current assets, subtract stock and subtract prepaid. You will get your liquid assets. Current assets are already calculated in first part where your current assets are 64,000 and you are required to subtract your stock, and let's see how much stock we have. Over here stock is 15,000 for first year. Just put 15,000, and we need to put prepaid, but in this question prepaid is not mentioned. So you may skip or you may write 0 as prepaid is not present. So now we are going to calculate it by simply subtracting stock from current assets. So we have got our liquid asset 49,000. Let's put them as liquid asset, and at the same time we need to put our current liabilities which have been already calculated. Here you can see current liabilities 38,000, so just put 38,000. Now finally we are ready to calculate answer of liquid ratio, liquid assets divided by current liabilities. So we have got our answer. Since we have 9 after 8, so you may short it to 9, it can be called. So in this way our second answer is also been calculated. We have rounded it. Amount was 1.289. This 9 was teasing me, so I have rounded it. It is 1.29, or if let's say you have written this answer, that would be okay as well. So there is no problem of writing 1.28 or 1.29, but let's check it out. So we have acid test ratio 93, 1.29. All right. So two answers are completed. Now let's see what third requirement is said in the question, debtor turnover ratio. Kindly keep it in mind, it is debtor turnover ratio. So first step is to calculate the ratio. We need to have net credit sales, and you are going to divide it with average debtors. How would we calculate net credit sale? It's already understood and discussed. Whenever you want to calculate net credit sales, you are in need to have gross sales. Then you will subtract return, and then you will subtract cash sales, with which you will get your net credit sales. So let's go back to the question. And here we have got an easy step because net sales are already available. Since we are not given any cash sales or credit sales criteria, so we are not going to calculate net credit sales through this formula. Net credit sales are already available and amount of net sale is 1 lakh. So we will put it directly. But keep it in mind, the formula is very important. Sometimes only in this question net credit sales are provided. Sometimes net credit sales would not be given and you will have to apply this formula. So for the time being we are proceeding to our next step. Then we need our average debtors. Since it's a first year, we do not need to calculate average debtors and no other receivables are present, so you can directly take 40,000 to mention your average debtors. So now we are going to finalize the answer. Net credit sale divided by average receivables. So we have 2.5, and this is debtor turnover ratio 2.5. So in this way our third formula is also calculated, and we are now going to proceed for fourth requirement. Let's see what fourth requirement is. That is average collection period. So since it is collection period and we do know how to calculate collection period, for that we need same formula which we have put over here. Just average debtors will go upside and net credit sales will be written downward. Net credit sales, T was missing. So in this way our formula has been completed except for one step you are in need to multiply it with 360 or 365 or 361, but here you can see that in our question it has been mentioned to suppose that there are 360 days in a year. So we will put 360 directly instead of 365 or 366. Formula is completed. Average data in previous steps have already been calculated, that is 40,000, and you are need to divide it by net credit sales, which is 1 lakh already mentioned. So formula is ready. We are only need to put it on calculator. Here we will multiply with 360. So let's see, 40,000 divided by 1 lakh, and you are in need to multiply it with 360. Let's put the bracket. So we have got 144. Let's check it out. We were doing fourth average collection period, and here is average collection period, and that is 144 days. So we have got 144 days. Fourth requirement is also completed. Now let's see what fifth requirement is saying. It is stock turnover ratio. So let's start stock turnover ratio. For that we need to have cost of goods sold upper side, and we need to divide it with average stock or inventory. Cost of goods sold, there are several ways, but simple CGS, we already know how to calculate cost of goods sold. For that we need net credit sales, and you will subtract your gross profit, with which you will be able to calculate your CGS. But in question, look at here, cost of sales means cost of goods sold is already available, 70,000. We do not need to put a formula over here, but kindly keep it in mind, in some question you will have to calculate cost of goods sold by yourself. So it's better to understand the formula as well. Please note carefully, cost of goods sold, net credit sale minus gross profit, which we have already completed in several previous chapters. Cost of sale is given in question 70,000. Just put it. And next, to calculate average stock. Since it is first year, we are in no need to calculate average. Stock is directly provided, and that is 15,000. So just put 15,000 over here. So now finally we will put it on calculator. 70,000 divided by 50,000, it is 4.67. Let's see. Stock turnover ratio. This is stock turnover ratio, and we have 4.67. So finally all answers are completed. This was your fifth stock turnover ratio. We have calculated average collection period. Then we have calculated debtor turnover ratio, and we have calculated liquid ratio. First requirement was current ratio, and all answers were matched: 1.68, 1.29, 2.5, and then we have 1.44, 4.66. So guys, in this way first year is completed. Now it's better to solve second year by yourself, but since it's the beginning, we are going to solve second year as well, because there is something to understand. Here we have two differences, and I am going to show you that how to tackle those differences. So let's start with the current ratio. Since it is already been solved, I will take help from here. Instead of writing again here, let's put current ratio. For current assets, we are now on second year. Current assets are cash, debtor, stock for 8 to 2510. So we are going to put it 8, 4, 20, 10. Hopefully these are same, but let's check it out again. We have 8 to 25, 10. 8 to 25, 10. And let's see how many current liabilities. Only two, 12 and 1. So just put 12,000, 1,000. So our current assets completed, current liabilities completed for second year. 8 to 25, 10. Let me check again. 8 to 25, 10. All right, now it's okay. We have seen. It's time to start our calculation. First step is to take sum of current assets. Second step is to take sum of current liabilities. Then current asset would be divided by current liabilities. So we have 3.46. So here second year answer is 3.46. In this way our first part of second year is completed. Now let's start second part, and we are going to copy it. Instead of writing again and again, here we will put, as you know that difference of current assets and liquid assets are stock. So what we will do, we will only subtract this stock, that is 10,000. Just write down everything which is written above over here, and we will just remove stock which was 10,000. Since prepaid is not present and we have already understood it, so let's save some time. Now it's time to calculate liquid assets first, calculated. And now we are going to calculate current liabilities for second year, also calculated. Current asset divided by current liabilities, so we have got 2.69 for liquid ratio, and here you can see 94, 2.69. So in this way, for second part, asset test ratio is also calculated. Now it's time to see the third formula, and that is debtor turnover ratio. Let's put it over here. Here we need to discuss something. I am assuring you that you will always take average debtors whenever you are calculating for second year. Here there is a problem in these answers. I am already informing you. These answers are not correct for debtor turnover and average collection period. So please understand it carefully. Alright guys, so now we are going to see debtor turnover ratio for second year. Net credit sale is needed, and here net credit sale is present 1,50,000. Please note it down. So just put 1,50,000 over here, and I am showing you something and I need your attention. Please be careful. Here we need average debtors. And how do you calculate average debtors? For that, you will put opening debtors and plus your closing debtors, and then you will divide it with 2. So this is the way to calculate average debtors, and I will show you how this heading or the answer is wrong as well, but you will follow it the way I am asking you to follow. Okay, since we are doing for second year, we have debtors at the opening 40, debtors at the closing 25. So we will calculate the average. 40,000 plus 25,000, and then you need to divide it with 2. With this you will be able to calculate your average debtors. And now we will put it on calculator. So we have got our average debtors 32,500. So we will put this 32 average debtors over here. Now it's time to calculate debtor turnover ratio, net credit sales divided by average debtors. So we have got our answer. But this answer, please be attentive, this answer would not be matched with the answers given in the book. Debtor turnover ratio for the second year. Debtor turnover ratio for the second year is 6, while our answer is 4.615, and you will write this answer. Why? Because I will let you know why this 6 had come. Net credit sale 150,000 and debtors 25,000. So here we will put sales will remain same 150,000, and it would be divided by, or it should be divided by average debtors, but in this criteria it has not been divided by average. Only second year debtors have been taken. So here is our problem. So let's put 25,000 and let's see how much answer we will get. 150,000 divided by 25,000. So you have got 6, and answer given in the book is also 6. But keep it in mind, it's the wrong answer. You are not going to put it. 4.67 is the actual answer, and I am going to mark it that it's not the correct answer. I am very hopeful that you will remember it. Though little bit time is being taken, but it's very important. I am in need to cut it so that you should remember it. So guys, in this way we have understood that answer is not 6, rather your answer is written over here, and that is 4 point, sorry, here we have debtor turnover ratio. Answer is 4.61. 6 answer we have calculated, but it's the wrong answer because average debtor has not been taken. Please repeat it for so many times. Average debtors has been calculated in this way, answer was 4.6, but when average has not been calculated, answer was 6, which is the wrong answer. 6 is not exact answer. So please note this is the accurate answer, 4.6. Alright guys, now let's forward, and we have fourth point, average collection period, and we are taking help from here. Same formula would be used, putting over here. Again, this is uh, average debtors to be posted, and since average debtors book writer is not calculating, so you will follow the same. Average debtors in previous part 3 has already been calculated, that is 32,500. So just put 32,500, and then you are needed to divide it with sales, and sales are also, look at here, in previous formula we have seen 150,000, and you are needed to multiply it with 360. Finally we will calculate it. Average debtors divided by net credit sales and then multiply by 360. So we have got our answer 78 days. And again the same thing, please note it down. Accurate answer is 78 days, while over here it is 60 days, and this would also be the wrong answer. I am cutting it. So what you will do, you will write 78 days. This is your correct answer. So fourth answer has been completed. Now fifth is stock turnover ratio, and we are going to copy these formulas and we'll use the same over here. And as usual, cost of sale is given in the question. Let's go back. For second year, look at here, cost of sale is given 1,10,000, and we will put 1,10,000 over here. Then you are needed to divide it with average stock. So again, average is needed, and here you will come to know how to calculate the average. Average stock is equal to opening stock plus closing stock divided by 2. Okay guys, so average stock would be calculated by adding opening and closing stock, and finally it would be divided by 2. So let's see how much opening stock is present. Here stock opening 15, closing 10. 15 and 10,000 closing divided by 2. In this way our average stock would be calculated. So let's put it on calculator. So we have got our average 12,500, and here since stock turnover ratio need average stock, we will put average stock over here. Formula is completed. Now let's calculate. Cost of goods sold 110 divided by average stock 12,500. So we have got 8.8, or it may be considered as 9. 8.8. If you will round it up, you may write it as 9. Let's see. So here you can see stock turnover ratio 9. Stock turnover ratio for first part was 4.66. Look at here, stock turnover ratio first part 4.6, and here we have 4.6, and then for second year it is 9, and we have calculated 9. The only problem in this question was these two answers, and I have cut it down. That was debtor collection period for second year and debtor turnover ratio for second year, because in this question the writer of this book has not calculated average, but you will calculate. So these are two wrong answers. I am sure that you have followed the instructions. You won't write this answer 6 or 60. Instead of that, in second part, this was your average collection period. Instead of 60, you will write 78, and instead of, I have told you that 6 answer we have calculated. It's very easy to let you know that 6 answer is there, but you will have to understand, if you won't calculate average, your answer would be wrong. So accurate answer is 4.6. In the similar way, you have seen that in stock turnover ratio there was average, and we have calculated average, and with calculation of average got the correct answer. So it is humble request to follow instructions what I have said. So in this way our all 10 answers have been calculated, except 2 all are purely matched. Question has been completed, but at the same time I am requesting you to please revise this question, practice this question for more than once, and after practice, still if you have any difficulty or problem, you are very open to ask your questions. through messages, text, or you can directly meet to share your problems. I am sure that I will be available to answer your questions instantly. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.